1011-1N1, Intro to Financial Accounting. And this is going to be my accounting cycle project part 2. So for part 1, for question 1, this is going to be our journal entries for the given information up here alongside the different transactions listed out here. So each transaction is going to have a date that's associated with it, and each one is going to have their own explanation of what happened. We have to take this information and contribute them into different journal entries. For example, October 1st, S. Ray invested $52,000 in cash, a $24,000 computer system, and $8,000 of office equipment into the company in exchange for common stock. For example, we will list out the date that responds, so our first journal entry is going to be on October 1st. The different information that we have is that he invested cash, computer system, and office equipment. We take that, cash, computer equipment, and office equipment. We list all of these out separately alongside their different values. So for example, this should be $52,000 in cash. I missed a zero, which is my mistake. I have no excuse. This should be $52,000 of cash, just as how computer equipment should be $24,000 and office equipment should be $8,000. We did exchanges for common stock, which is why we have common stock listed here as $84,000, as it is exchanged for all of these listed here. The difference between debit and credit is that debit is more of an immediate field, while credit is more of an extra step in a sense. When we pay someone debit, we pay them directly. This is going to be paid directly from one account to the other account. Credit is more from a third party. For example, in our second journal entry, we see that the company paid $3,280 in cash for 4 months' rent. Hint, debit prepaid rent for $3,280. So since we are paying this cash for 4 months of rent, we're paying in the future. So we take the rent, the prepaid rent, that's direct, but the cash goes on credit because we're paying the company for the 4 months. Instead of paying the whatever 900, 800-ish dollars per month, we're paying a lump sum for the 4 months. It's not direct, it's kind of going through this third extra step. So we take all of the different information that we have up here, which is our accounts and their numbers. We take all of these different transactions and we put them into this giant journal which collects each of them by their own separate date. So we wouldn't put this accounts receivable on the 10th, the 8th, the 15th because this transaction happened on this specific date. A thing I want to mention is that on October 10th, we listed no journal entry required because on October 10th, the company hired a new assistant. We don't list this because this doesn't directly affect the company. No money's being taken out, no money's being brought in, nothing is happening with the company other than just hiring a new employee. We haven't been able to pay them yet, so there's no wages expense. There's no kind of journal entry worth noting because nothing specifically happened. One thing I'm realizing in hindsight is that a lot of the information that I got wrong is a misinput of misinformation. So just as like we had here with the 5200 instead of the 52,000, a lot of the information that I got marked as wrong for was me misinputting the information. This is completely my fault. I have no excuse for this. Either I got caught up with the various different kinds of numbers, or I thought these numbers represented something else, or something along those lines. So for number 2, this is going to be our ledger accounts. So this is taking every single journal account, and it's going to be listing them out per, per account. So the importance of a journal is that we can list every single transaction out. We list the date and what happened on the date. That's good for knowing what happened on this day. If we say, hey, how much money did we earn on this specific day? What happened? We can see how much was on debit, how much was on credit, what was the cause for the debit, was it cash, was it computer supplies, etc. We can see exactly what was paid for or collected on that specific day. The ledger account lists all that out, but by per account. If we are just looking at cash, instead of going through every journal entry to find our collected cash, it combines it into one little chart. So it takes all of the different days that cash was on, it lists out all the values, either debit or credit, and the value, and then it totals out the balance into one giant number. This is if we want to look at, hey, for November 31st, how much cash did we make or lose? And then it specifies every single transaction out per day going all the way back. This is good for a general overview of one specific account. Instead of looking at a giant journal entry, we can just look at the ledger accounts to find one specific account with all the information we need. For number 3, this is going to be our trial balance. Our trial balance is basically taking our ledger accounts and combining them all into one nice little chart. So we take our cash, which I got wrong due to the misinformation, but if the correct number was here, we would take the correct number and we would input it into the cash, which is on debit. This is basically our lump sum of cash that was made or lost. This is our lump sum of it into one section. We do this with all of the different accounts and we list them out as of their values. Their combined values is listed here on the balance on the right. We take the highest value that we ended off on, which in this case would have been $48,676, and we place it into its corresponding section. All of this will combine out to how much in debit versus how much in credit. This gives us a good idea of what contributed to the debits and the credits. Just looking off of this, regardless if the information was right or wrong, we can see that the biggest response for our debit was cash, with a close second coming in at our computer equipment. For our credit, we can see that our common stock was our main leader in this aspect, while our computer service revenue was our second highest. We can decipher each of these out into their own separate categories, but they overall come to a giant balance. So for number 2, this is mainly split into two separate parts. The first part is going to take all of this information up here, and it's going to combine it with all these transactions listed here. So the first one that we have to do is going to be our journal, of course. This is going to be, as I stated earlier, we take the date the transaction was on, we take what the transaction included, and we take the value and if it was debit or credit. For example, our first transaction was on December 7th, or 2nd, my apologies. They paid 10,020 cash to Hillside Mall for Business Solutions share of mall advertising costs. The key takeaways here is they paid 1,020 in cash, and it's for a share of the mall's advertising costs. So our advertising expense is going to be the same as the cash that we paid the company, which is why we include both. It's like how in the first question, how we ended up trading it for stock. It's that same principle here. We do that for all of the different transactions that were listed here, and we list them out into their respective journal entries by date, by title, by value. For our adjusted entries. This is going to be our adjustments based on this additional information. So while our first journal was just on the information and the transactions, this is kind of an after the fact. This happened after. For example, number F, 3 of 4 months prepaid rent has expired. So we take the 3/4 of our rent expense and the prepaid rent and we list them out. Not 4 out of 4 because not all 4 months haven't been paid. Not 2 out of 4 because there's another month that's been paid. And we listed out that has been adjusted to this additional information. Again, everyone is listed out by their transactions, A, B, C, D, etc., which are listed out here. We take the title, which is what we have to decipher in each of these. As I said, the rent expense and the